Hey everyone, welcome to the best US Mint news channel on YouTube. I'm Son of a Silver Stacker. Today's date is the 13th of October, 2025, and in this video, we're going to try and wrap our head around what's going on with silver and the silver refiners and smelters not accepting junk silver, that's right, 90% silver, or sterling silver 925. Now, before any of that, though, if you're new here, don't forget to like, share, comment, and subscribe. We're trying to get to a bazillion subs. It's actually a really big number. You can look it up on the Google machine. It is ginormous. Also, we're always live, never edited, and always unscripted. I never know what I'm not going to say. Now, let's bounce over to moneymetals.com. I can show you those live spot prices. So it looks like bingo, everything is up this morning. So gold's up 59.80. See that change just right when I said that? 59.80 to 40.94.10. We're going to be probably what, $5,000 by Christmas? Man. Silver up $1 to 51.38. Platinum up 49 even Steven to 16.58.15. Palladium up 49.90 to 14.63.55. And Dr. Copper up 20 pennies. Wow, money penny, 20 pennies. Up to $5.04 per pound. Down here, you're looking at an in-stock American Silver Eagle, whose premium is $9.89 for a quantity 1 through 39. They ask that you pay, wow, a hefty $61.27. And is that the price we want to pay for silver bullion? No, but that's what's reality right now. Now, the buyback right now is 50.65, and that is definitely below the silver spot price. Isn't that something? So they don't even want them as bad as the refiners, it seems like, right? Now let's go to the mint schedule real quick. There we go. Limited edition silver proof set. This one is running out of subscriptions. I think there's less than 400 subs left on this particular product. That drops November 6th, which I believe is 4 weeks from this Thursday. So yeah, that could actually be out of subscription soon, and that would be kind of amazing, actually. Now, next stop is going to be the Google machine, and I put here, refiners stop accepting silver, and the AI folks put it together pretty quickly here. It says here, as of mid-October, hey, we're in mid-October right now. As of mid-October 2025, major silver refiners have temporarily stopped accepting significantly restricted stopped accepting, or that's a big word right there, right? Or significantly restricted the purchase of lower purity silver, such as sterling and junk silver. That I don't know. Well, why would they do that? That seems so odd, right? Well, because it costs a whole lot more money and time to refine that into 4.9 fines and turn them into 1,000 ounce bars to deliver them from this country over back across the pond to the LBMA, where they actually, I've heard that they've actually run out of silver over there for delivery. That's amazing, folks. And remember, when the tariffs started here in, I think, April or May, all that silver came across the pond to the United States. So now it's going back the other way. It is quite incredible, actually. It says here the shutdown is due to a surge in demand for physical silver, which has overwhelmed refining capacity and created severe backlogs. Okay, I don't think that's the whole story there. I think they're missing something there, but we'll see what's what. Why refiners stopped accepting silver. The primary reasons for the market disruption are capacity overwhelmed by low purity scrap. So it looks like they got a bunch of junk that they have to refine into pure 3/9 fine or 4/9 fine silver, and that takes more effort, more time, more energy. And do they want to do that right now when they have to get those bars over to the LBMA extraordinarily fast, ASAP? No, you don't want to do that. It says here, but refining lower purity metals like 925 sterling silver and 90% coin in silver is more labor intensive and time consuming and takes more energy, right? So they're prioritizing the fine silver, the ones they can just melt and pour immediately. Yeah, just melt and pour and go and ship it. To address the severe processing backlogs, refiners are prioritizing more efficient and less costly refining of high purity 3/9 fine and 4/9 fine silver. All right, here we go. Market volatility and backwardation. Remember, we've talked about backwardation before, and that's where the price of silver is more expensive now than in the futures because everybody wants it right now. That's a big deal. It says here, high physical demand has caused the spot price of silver to exceed the futures price, a condition known as backwardation. This creates dysfunction in the market, making it risky for refiners to buy new inventory at uncertain prices while waiting to process their backlog. Here we go with logistical bottlenecks. The physical silver market is experiencing major logistical issues, with some traders rushing to transport silver bars via expensive air cargo to London to capitalize on massive premiums. Massive, yeah, they're getting paid over there. making their wallets fat. These constraints and spikes in demand, particularly from markets like India, are contributing to the gridlock. Yeah, if everybody in India sold their silver, the price of silver would probably drop by $10. But has it? I don't know. It doesn't seem like it. Looks like it went up again by $1 today. How this stoppage affects silver market, and we'll go into two other articles here shortly, and I'll give my opinion on those. It's quite incredible what's happening right now. Individuals and local coin shops trying to sell low purity silver are finding that major refiners are not an option right now. And gosh, you know what? I would say that junk silver, sterling silver, might be purchased under spot right now at coin dealers. Since they can't move it, they probably want to get rid of it, right? Maybe, just maybe, I'll call the local coin dealer today and say, hey, you got any junk silver for sale under spot? And he's going to be like, yeah, come on by. Let's keep on keeping on. It says here, dealers and coin shops respond. Coin shops and bullion dealers are adapting by continuing to buy scrap, but may pay less. That's right. If you go in there with some scrap silver, they're going to be like, yeah, I can't give you a spot. I can give you 90% of it. And you're going to be like, hey, okay. Or are you? Assuming the risk of holding the metal until refiners catch up, some dealers have also completely stopped buying anything other than high purity silver. And the high purity silver, you might ask, is 3 nines fine, 99.9. Yeah, that's American Silver Eagles, folks. Now here we go. Potential for suppressed junk silver prices. While the price of fine silver remains high, the price for junk silver may be temporarily suppressed as it is blocked from the refining stream. This could be a good time for those who buy junk silver, as prices may rise once the backlog clears. And do you think it will? It could, right? And I don't think anybody's going to stop stacking silver, right? If they're silver stackers. All right, no immediate end in sight. Oh boy, that's not a good sound. All right, as of mid-October 2025, at least one major refiner has reportedly suspended all silver intake for the rest of the year. Uh-oh. Yeah, we're here in October, mid-October. We have 2.5 months left of the year. The situation is expected to last for a while, potentially until the market price stabilizes. And when's that going to happen? We don't even know. So there was something that was sent to me on a text. And I'm going to share it with you because I found it here on Reddit. This is 2 days ago. It says here, dealer again, sharing some more industry chatter. And AI doesn't talk about what we're going to talk about here in this article or this text that I got, but it is very, very important to consider. Now, he starts out by saying this is not as all caps, right? Financial advice, and certainly not a call to action. He says here, to set the stage briefly, when a regional refiner buys metal in bulk, they can immediately turn that over to a larger national or global refiner upstream. The big refiner typically fronts about now this is really important, folks. The big refiner typically fronts about 90% of the value right away, often before the shipment even arrives or is assayed. And, assayed means, hey, let's find out the composition. Let's find out the purity. Let's see if it's the real deal, right? Now, it says here, importantly, and I think we should focus on that, importantly, that advance is interest-free. Okay, that's interesting, interest-free. That arrangement, i.e. margin, is the absolute critical to operations. So it's absolutely critical to operations. All right, this is a big deal, folks. Regional refiners operate on a cash-in, cash-out basis. So getting 90% margin fronted is what keeps operations liquid and metal moving. So yeah, cash money in hand, and you got the silver going out. All right, here we go. This is where it gets really gnarly. What we've been hearing in the last 24 hours is a break in that system. Some large refiners are now cutting that margin dramatically. Yeah, remember it was 90%? Well, now in some cases, it's reportedly as low as 30%. So if you send a monster box, okay, to whatever, of silver to these folks, they're going to give you 90% on that. But you send a monster box now, you're only getting 30% of that. Yeah, no more front for you. All right, what's worse, though, the fronted capital, the margin is no longer what? Yeah, remember we said here, importantly, that advance is interest-free. Well, guess what? It's not anymore. Yowza. It says here, that combination could choke cash flow across the middle market, refining sector, and may cause some to stop accepting silver altogether. In fact, we know that it has, right? In fact, certain regional refiners have actually stopped purchasing silver altogether since the junk silver stop buy went out 2 days ago. This all trickles downstream. Coin shops do not, for example, buy and hold with the hope of that silver will rise. Maybe they do for their 90%, who knows? So if a local coin shop can't immediately liquidate your monster box of eagle or rounds, they likely won't offer a high bid, or worse, or a bid at all. They'll offer you low below spot, right, which is lower than what you want or what you really think you ought to get. What keeps the wheels greased is the large refiners' ability to hedge their purchase on future market. Okay, here we go with the backwardation again. That's why one layer of how and why they front capital interest is free. Problem is, the futures market is now what's known as a backwardation, and that's another layer in the sandwich. All right, before anyone asks, and I'll leave a link in the description here for this particular Reddit thread. Before anyone asks, I do not know what is driving this shift or what it means, just sharing what's circulating through the grapevine. This is not financial advice and certainly not a call to action. I'm a simpleton trying to run my own operation, and I value absolute transparency. There's literature out there that suggests both bullish and bearish interpretations. You interpret it how you will, and good luck out there. That's a great article, really is. And now let's keep on keeping on, because this is an article from Reuters, I think, that really sums it all up. And I will leave a link in the description for this one as well. This is by Ashita Shivaspada Prasad. Boy, oh boy, I ruined that. I apologize. This is from Reuters. Title of this article is Comex silver seen headed back to London due to record spot prices. There's a bunch of silver bars right there and silver grains. Wouldn't that be fun to fill your bathtub with? All right, summary, silver spot hit a record high of 51.22 on Thursday. Where are we at now? 51.22? Nope, we're above that, aren't we? Wowzers, that's incredible. Another new record. India Kotak Mahindra temporarily halts new investments in silver ETF amid shortage. That's what is that? Exchange traded fund? I probably can ruin that. I can't even remember what that is right now. Let's go ahead and ETF. Let's find out what ETF is here. Exchange traded fund. Okay, cool. Cool beans right there. All right, focus on U.S. probe into potential tariffs on critical minerals. Oh boy. All right, here we go. London, October 10. This is just a few days ago now, folks. It says here, silver that flooded into the United States earlier this year due to fears of tariffs on imports is likely to head back to the London physical market, where shortages of available metal drove the spot above U.S. futures. Remember, we're in a silver shortage. They can call it a what was the terms they use? It's the supply. It's in a deficit. Yeah, it's a shortage. They can call it anything they want, but if there's not enough silver out there to meet demand, it's a shortage. Traders seeking to avoid potential tariffs have been shipping silver to the United States due to its inclusion on a draft list of U.S. critical metals in September, part of a push to secure domestic supply chains for key metals. All right, look at all these American Silver Eagle ads over here. All right, here we go. Spot silver was trading around $50.10 per ounce on Friday after hitting a record high of 51.22 on Thursday, while silver futures on the Comex were last at $48.10. Yeah, what are they now, right? That price differential is wide enough to make it profitable for traders to bring silver back to London, an analyst said. There's a genuine shortage of silver in London, but you've got 500 million ounces sitting in Comex doing nothing, Ryan Mangan says, head of global metals and bulk trading at Macquarie, said at a briefing on Thursday. Silver inventories at Comex are at 526.1 million troy ounces. 526.1 million troy ounces are close to hitting the record high of 531.9 million ounces hit on October 3rd. Yowza. That's incredible, folks. So much silver went to the U.S. that there's now almost 4 years' worth of domestic demand stockpiled, said Adrian Ash, head of research at online Marketplace Bullion Vault in London. Lease rates are a little over 11%, which is phenomenal. Remember, we talked about that, right? Silver lease rates refer to the cost of borrowing physical silver, are an indicator of demand. They are high because of how low liquidity in London due to a recent run-up, a jump in demand from silver-backed exchange-traded funds, which came on top of previous flows to the U.S., said a precious metal trader. The effect from tightness in the London market, this limited supply, right, can already be seen in India, where Kotak Mahindra asset management company temporarily halted fresh lump sum investments in its silver ETF on fund on Thursday to protect investors. The metals market expects to hear next week from the U.S. probe into potential tariffs on critical mineral imports ordered by U.S. President Donald Trump in April. However, the government shutdown could delay any decision. I don't think the market will send too much back unless tariff implications are very clear, said Tai Wong, an independent metals trader. That is pretty wild, folks, what's going on with silver right now. That is really just something else. What are you going to do now? Do you focus on buying 3/9 fine, and does that change? Like, let's say you like junk silver, 90% constitutional, right? What if you like sterling 925? Do you stop buying that now that you know that the dealers may not ever buy it, the coin dealers, because they can't get it to the refineries? They only want the pure stuff. Look at that, not 3/9's fine. They just want to melt and pour so that they can get that metal over across the pond as quickly as they possibly can. And it doesn't take much time. It doesn't take much money. And they could just ship it over. Even if it's a premium, they're still going to be making money because of the price premium over there. And you think 989 is expensive. I wonder what they're paying on their premiums. That is wild, folks. And that's what's going down on the silver neck of the woods. How does that affect us? And do you not care because this isn't the price point you want to sell at, even though silver is at an all-time high? Are you saying, well, I don't care because it's going to go to 100. I don't care because it's going to go to 200, or I don't care because it's going to go to 2,000. And remember, and this is one of the most amazing things, is that the ratio, God's ratio to gold and silver, it's like 7-to-1 is what I hear. And is silver 7-to-1 on the gold-silver ratio? And I think we're about 80, maybe 75, somewhere in there. But we're nowhere near 7-to-1. And if we do become 7-to-1, watch out. Watch out. That's going to be incredible. Now let's go over here to what, the +1 action. Bingo, right there. This is Proverbs number 1, 1-6. And if you don't read the Bible and you don't want to read the Bible, it's too much. I get it. That's fine. But if you do, and you want to learn how to act in public or how to treat other people, this is really where you start. And if you're young and you learn this at a very young age, it'll be like, well, hammering a design into stone. It isn't going anywhere. The Proverbs of Solomon, son of David, king of Israel, in order to make known words of wisdom and discipline, to make words of understanding discernible, to accept wise discipline, righteousness, justice, and fairness, to provide simpletons with cleverness, a youth with knowledge and design, that a wise one may hear and increase their learning, and a discerning one may acquire strategies to understand parable and epigram. These words of the wise and their enigmas. And I think what this means is that these proverbs will benefit everyone, from the unlearned youth to the wisest, most knowledgeable elder. There it is, folks. That's what it's all about. Proverbs, Psalms. It's got everything you need in there. You don't even need to read anything else if you don't have time. But you read those and you'll learn a whole lot, especially if you try and discern and understand what it all means. Now let's bounce over to 3/9's fine, 99.9 KOI and Coin News Radio. This is Disturbed with the Sound of Silence, the official music video with the 4K upgrade. Who wants an upgrade with like 5Gs? Yeah, that's pretty awesome. Now, with that said, I want to thank y'all for coming. Thanks for dropping by. Don't forget to hit that like button. And if you do like what you hear and see, sub the channel. It's absolutely free. What's not free? Yeah, that's going to be membership. It's $1.99 a month. It's the price of a cheap cup of coffee or inexpensive cup of coffee, whatever adjective you like to use there. And it helps these videos keep coming out each and every single morning. And it equates to about 6.6 cents per video in a 30-day calendar month. Not a whole lot of folks. And if that is a whole lot of, and you can't afford it, I get it. I hope your situation changes soon so that you're able to support the channel that you listen to each and every single day. You all have a great start to your week. Stack around.